Hi, and welcome back. We're diving right into the numbers this week, looking at the inflation rate in the US. We're also going to be talking about gold and what it's been doing over the past few weeks. We also want to look at maybe what we think the ECB is going to do tomorrow in terms of a decision rate. So let's start off with gold. Gold hitting all-time highs day after day. Even silver itself
Yeah,
starting to really get some momentum. We were yesterday evening at a event sponsored by mining companies. That was kind of fun to be a part of that and see what the industry insiders and the bulls of the precious metals were saying. And even we, before we went to this event that we go every year, we took bets of where we thought they would, not bets or guesses, where we thought they would set price targets and breakout points. So that was quite interesting to see. What was the most surprising for you when we were looking at that picture of gold?
I mean, it's interesting in general, like how positive they are year after year and always have these crazy forecasts. And like for 10-year forecast for the gold price, which is absolutely insane doing a 10-year forecast. But they are expecting like that gold price at some point hits 8,500 US dollar an ounce. Quite a bold forecast, I would say.
A very really bold forecast. I think when we were initially guessing what they would set it at, I think you took the highest at 3,600 or
Yeah,
something.
something like
Yeah,
that.
and we both thought like, oh, this is quite a high guess. They destroyed that. And
Yes.
yeah, so that was quite interesting to see. I mean, even with silver as well, they were projecting pretty high numbers with breakout points at 32 US
Yeah.
dollars an ounce,
Going
which
up to 40. Yeah.
correct, going up to 40, which you called spot on,
Yeah.
which was very interesting to see in terms of what we were kind of wagering on. And silver seems to be headed in that direction. Will it peter out at some point? We'll see. But I mean, the strength that it's had in the past 2 3 weeks has been quite impressive. Um,
Yeah, especially the last week. I mean, silver, that's so interesting. Like the first quarter, it almost didn't move. And then at the beginning of the second quarter, out of a sudden, it started to rise. And at the same time, I mean, the gold price we have seen already towards the end of the last year, where it has stayed very persistently above 2000 US dollar. And then it, like for a short period of time, it fall below 2000. It was my expectations at then, especially with the strengthening US dollar, that it will go further down, but it didn't. And so now we are staying well above 2,300 US dollar an ounce, which rarely anyone would have expected to happen, except maybe the guys from the event last last
yeah,
night.
yeah.
But yeah, it's interesting how persistent it is in an environment we find ourselves where the markets are having a great time, where the US dollar is strong, where it's kind of an everything bubble, everything rally, and so really interesting to see where we are today.
Yeah, it was super interesting to look at their silver and why they thought silver would grow in terms of supply that's
Yeah.
on the market and the demand for it. And that was the most interesting to see that the supply is very low for the high level of demand. So in potential there, you can see some interest of why the price might go up. And on gold, that was interesting to see with the US dollar strengthening, the economy doing
Mm.
well, and gold still rising. That's kind of an anomaly. Usually it doesn't move like that. And they were talking about how if the US cuts interest rates, gold will go even higher.
Yeah.
Now, rolling that into our next topic of inflation,
Mm.
everyone is talking about how strong the US economy is. Numbers literally just came out. Inflation has now risen again in the
Mm.
US. And that presents a very serious challenge, challenging this sticky inflation and how the Fed's going to react moving forward.
Yeah, I mean, there was an issue that was very clear, and a lot of this, or broadly discussed in the past 2 years, where like people were saying, look, the beginning bringing inflation down from about 10% to 3 4%, yeah, that's kind of an easy task, but bring it like going the last mile, bringing it from 3 to 4% down to 2%, that's quite a challenge. And as it turns out, investors have been way too optimistic, me thinking about, oh yeah, now we will hit the 2% in March or in April or whatever, expecting up to six interest rate cuts, as we have discussed last time already. And now it becomes clearer and clearer that there will be maybe 1 to 2, if at all. And as the numbers show today, which are higher than what the forecasts have been, and even have increased. I mean, CPI increased from 3.2% last month to 3.5% year over year this month, which is quite a jump.
Yeah.
So yeah, I'm not that optimistic about the Fed cutting interest rates this year.
Well, and as we discussed in our last video about the Fed chair, I think it was it Minneapolis?
Yeah.
Who said, yeah, hey, look, maybe one, potentially none.
Yeah.
And how much did he already see these inflation numbers coming? What was he looking at where he started to get a bit, I guess, conservative, or saying, hey, maybe we really have to keep fighting and remain consistently higher. I mean, we see this on the back of, people seeing that in Switzerland, they cut the interest rate. The Swiss National Bank cut the interest rate.
Yeah.
But Switzerland is now at a 1% inflation, I think.
Yeah.
So even Switzerland, not only are they within their target, they're right smack in the middle of their target range in a really healthy environment, because the S&P has been able to solely focus on simply price stability. And I think that's the other side that challenges the Fed. When you look at their two mandates of unemployment and price stability, well, if unemployment is good, they can say the economy is great. But if sticky inflation is at 3.5, 3.6%, then they can say, yeah, but well, at least look at the unemployment rate. And that kind of, I guess, allows them to kind of step back and say something is better than it is.
Yeah, and something different, which also came out this week, was a survey which they did or do on a regular basis in the US about like the sentiment with the small and mid-sized companies, and it has turned to be quite negative.
Yeah.
And it shows how the small and mid-sized companies in the US are really struggling with this high inflation. We all the time, when we talk about the economy and hearing all these great numbers out of the US and also other economies, it's always about the big companies who have like almost unlimited resources and can do whatever they do. But if you have a small size company, you have to make sure that at the end of the day, all your bills are settled, that all your employees get their salary. That's a total different story, because you can't just go around to the bank and say, oh yeah, I have another billion of credit and I'll pay you back somewhere far in the future. That just doesn't add up. And so I think that there is a lot of unseen challenges in the economy, which will start to rise further and further.
Yeah, and I think it also shows to the point of when you look at the debt situation in the States, and I mean, sitting at $34 trillion per American, that's $400,000 that every American would have to pay, or around that, a little bit more. And I mean, realistically, how are you going to pay that off? You can't. But you can try to inflate the currency, or if inflation persists, you can cut back at that deficit faster than you would than if the economy didn't have that inflation, if the dollar didn't have that inflation. And at the end, inflation is just a tax on your population.
Yeah.
And it, in this case, will help the US to maybe break down that debt just a little bit. But based on their budgeting, I don't see that happening.
Me neither.
Yeah. So it'll be interesting to see what the euro does. Currently, they have inflation, or the European Central Bank. That decision will be tomorrow.
Yeah.
It'll be interesting to see what they do. The euro area is sitting at about 2.6% inflation, I think it is.
Yeah.
So they're a little bit closer to their target than the US. From my opinion, I think they'll hold it steady. I don't think they'll raise the interest rates. I don't think they'll cut it. I think they'll stay the same.
Yeah, I agree. I don't think that there is a reason to rush into anything. They will just stay where they are. That's my forecast. But we will see. I mean, what is more important, more interesting is always what the officials have to say to their decision.
Cool. So next week we're not going to be here, but in 2 weeks we will be here. So look for us then.
Perfect.